All right. Good morning, everybody. Today we got M&T Bank. We got Michael Kennedy here with us and Rick Bowder. They're going to be joining, telling us about some of the products that they have to offer and some new exciting things in the mortgage world. So I'll hand it over to you guys. Let me know if you're having issues sharing your screen, and I can pull it up on my end.
Okay. Brooks, thank you very much. And thank you guys for allowing us to come in. Oh, there's screen share there. Okay. I was looking for um, Rick Bowder and I are on today, as Brooks said, and Robin Sealover was supposed to join us as well. And she's unfortunately texted me this morning. She was not feeling well, so she sends her apologies. But so I'm wishing her well and get better soon. I'm Rick and I just wanted to go over a couple things that would, from a high touch, see if there's any ways we can help you guys convert more leads, convert more deals this year. A lot of lenders have multiple programs out there, so we didn't want to bore you to death with just specs on products and stuff, but we did want to kind of share some tools that you guys could have access to that might move your agreement to get better eyes on it, to maybe get some more accepted, because I'm seeing, and this will be an end question for you guys, for us, is what you're seeing out there as far as the market so far this year. How competitive is it with multiple offers, or how many days on market, that sort of thing? Are you seeing an equal balance of that? But some of the things Rick and I were going to get down through today, I kind of just put a one slide together here with a couple points we're going to make. And Rick's going to touch base on the first two here. I was going to back clean up on the last point there, but we wanted to talk to you guys about the swing loan, some first time home buyer grants that only M&T has, and then maybe how to incubate a couple buyers that may not be quite ready to buy yet. And I'll get into that later. But with that being said, Rick, I'll turn it over to you if you want to go ahead and get started with the bridge and swing loan opportunities here.
Thanks, Mike. Yeah, appreciate that, and appreciate you guys letting us have some time here again this morning. So as Mike said, we kind of just want to cherry pick a couple of our products. We obviously have a full menu of mortgage products to offer, but a couple that we think kind of set us apart from the competition are our swing loan, bridge loan slash HELOC product. Because really it's all the same loan or type of loan. It's a no fee to the borrower loan. And obviously what we're trying to do is assist your buyers, or help your buyers pull as much equity out of their existing property to use towards purchasing their new home. We will go up to 85% of the value of the existing home, and it's an interest-only payment until they sell that property. That loan gets paid off and goes away. The difference between the two primarily is, if their current house is already listed for sale, then it needs to be done as a bridge loan. And we will only do the bridge loan if we get the mortgage on the back end as well. The HELOC is, again, no fee loan, interest only payments. They don't pay anything on that until they don't make any payments until they would use or draw from the line of credit. But if you send someone to us for pre-approval, and we know at that time that they want to pull the equity from the current house, then Robin and I have the ability, we can do the HELOC applications as well. So we can take the pre-approval, input the HELOC application. It can be sitting there and waiting, so that once they do find their new home, then they can draw that money against the line. Same thing, house is sold, HELOC's paid off. Again, they both kind of work the same way. It's just really the timing of it. And again, if we can catch them up front, it's a much easier, smoother process if we have that HELOC in place. instead of scrambling around. As you guys know, settlements are quick anymore. On the HELOC or the bridge loan, you do have a 3-day right of rescission. So you have to, if we're doing the bridge loan, they're already under contract to buy the new house. We have to take that extra, 3 or 4 days into consideration on the back end. Again, if you have the HELOC set up front, they're already closed on that. It's just sitting there waiting to be used. The 3-day right of rescission is already passed. So, any questions on that at all, Mike? Anything you want to add on either of those two products before we jump into the grant programs?
No, I think you did a great job covering the overlay of that. I think it's not for everybody. Obviously, it's a lot of freight to carry, guys, to qualify somebody. So they're carrying the old mortgage, the new mortgage plus any other debt they have. And sometimes it's 3 mortgages if we're just doing the HELOC, like Rick said. So they have to carry the first because sometimes they have a 3% rate on that mortgage. They don't want to pay it off. But one of the coolest things, the last point I'll make on the swing, is we have total flexibility of the funds. I can actually pay off car loans with a swing loan just to qualify them. Okay. I've had swing loans at other banks before. They don't let you do that. You can only use it to access the equity to put down on a new house. I can give them enough for the down payment on the new house, but I could also pay off. Now, we shouldn't be paying off 7 credit cards. I mean, that's a risky loan. But if I had to pay off the first mortgage, a second mortgage, go back in first lien position again, and pay off their car just to get them on the other side, we can do that. So they don't care how we put that puzzle together. And that's extreme flexibility on our side to try and help people, because it is hard to carry all that debt. It's very helpful to have that kind of flexibility.
Mm-hmm. Yeah, it's a great point, Mike. Thank you for adding that. Regarding our grant programs, as Mike said up front, these are 2 programs that are specifically M&T products. We have a $10,000 grant and a $5,000 grant, and they're both free money. You can't combine them. It's one or the other, but it's free money. It's not paid back. When they sell the house, it's not a prorated payback or anything like that. There are qualifiers on each of them. The $10,000 grant, they must be in what's considered a low income. They must be a low income borrower. Now, low income, can kind of be can kind of scare some people off, but in central Pennsylvania, the counties around here, low income is like 53,000, and that may not sound all that high either, but I've worked with folks that are buying, $200,000, $250,000 houses, on $53,000 income per year. And another thing that's kind of cool about, this being an M&T specific product is that if you have a buyer, and I'll give you an example. I just had a borrower who, kind of a manual labor guy, base income was just below the low income level. Now, he got overtime, he got bonuses. What he actually made on his W-2 was a decent amount above the low income level, but I could get him qualified for the mortgage just on his base income. And if that's what I'm using for qualifying purposes, that's all I have to use to qualify him for the grant as well. So, again, it's a great program, free money. We use it as obviously as much as we possibly can, to help folks out. The $5,000 grant, it's a little bit more flexible on the income limit. It's a moderate income level. So it goes up to, I think it's like around 85,000 here in central Pennsylvania. And obviously we can get you the specific numbers on those, but For the $5,000 grant, they also must be purchasing in a low to moderate census tract. So it's just an extra qualifier on that one. But again, totally free money, doesn't have to be paid back. Anything, Mike, that you want to add there? Anything you think I missed?
No, I can't think of anything. You brought the best point up is we don't like some other banks that may have a grant. They'll use the full 1003, or I'm sorry, the full application income for both buyers. And if, like Rick said, if they're making overtime and bonus, or they have a second job, they're adding all that into a bucket to qualify, and it usually knocks them out. Where here, if I can get them qualified on base income, I don't care if they have 7 other jobs.
Right.
We'll still give them the grant money. So that's pretty cool.
Or, and that's a great point too, Mike, or like household income. If you have a, husband, wife, boyfriend, girlfriend, whatever, domestic partners, but only one of them is going on the mortgage, we don't use household income either. We just use the primary borrower's income. That's it. So again, there's a lot of first-time buyer programs out there that use household income, no matter who's on the mortgage. If they have a child that works a part-time job, you have to count that income. You have a parent that lives with you that's collecting income, you have to use that as well. Our program, you don't do that. So a lot of flexibility there.
Yeah, let me see if I can bring this up real quick. And see if I need to move this over.
While Mike's looking there, a couple other things I just kind of wanted to throw out there is that we do also offer what we call our loyalty discount. So whether they are an M&T customer currently, or they're a new M&T customer, if they open up a deposit account, checking, savings account with us, we will give them 0.8% off the interest rate on the mortgage, to have those payments automatically deducted from that M&T account. And then the other thing that we wanted to also just make you aware of, if you're not aware of it already, is that this year Fannie Mae has done away with their minimum credit score requirements. So there's no longer a hard stop at 600 or 620. You can have a borrower with a lower credit score, and I think we've had some that have dipped down into the 500s that have gotten approved. Now, what we're seeing is it's a lower loan to value. You're not obviously going to have somebody at a 580 putting 3 or 5% down that's going to get approved. But if they have 20%, 30%, 40%, again, maybe they're pulling equity from a current property to lower the loan to value on the new purchase. We have seen some of those that have gotten approved at lower credit scores. So again, if you weren't aware of that, keep that in mind, that there's no longer a hard.
Oh goodness.
We lose somebody, Brooks?
I don't know if Rick froze there.
Can you still hear me? It looked like Rick froze.
I hear you, Mike.
We got you.
I think Rick got frozen.
I got a question. One of the things Rick brought up was when you were talking about those grants, about a census thing. Is there like a map or something of what areas qualify for this grant program?
Yeah, it's county driven, believe it or not. So each county has a different income limit. So whenever you guys get a buyer, we'll go to that county, and we have to go to the geocoder. And that's a link that we could probably share with you guys, Tim, if you want, because it'll show if the property is eligible in the low to moderate. And we have we have our stats for the income limits that we set for that grant. So Rick, there's a geocoder that you go out for some of the low income for those properties. If those are, that's something you type in the address, and it either gives you a yes or no.
Right. Yeah, it is. When you're looking at the property qualifier, Tim, it is where you can go into the geocoder, you plug in the address, and it tells you what census tract the property's in. So, okay. Yeah, and we can obviously share that with you to share with your folks for them to use.
Yeah, I mean, we check it on our side, obviously. When we're doing
Yeah.
pre-approvals,
Yeah.
if they're ready to make an offer, we're definitely checking that geocoder before you make the offer to make sure that's still eligible for the grant. Otherwise, we got to redo the pre-approval. So,
Because as good as that would be for buyer's agents, it's also good for listing agents. If you get a listing in that area to be able to market that
really, yeah,
it's available for a grant,
Yeah.
or
Great.
if an agent was going to hold an open house, that particular weekend to be able to tell people that this property is eligible for a grant,
yeah,
Yeah.
yeah,
depending
Great
that's a
upon.
point.
good. Yeah, I mean, you can always say certain restrictions apply, meaning the income level, but at least that it would get inquiries and people interested in wanting to buy that house if they know they can get up to
Right.
10 grand.
Yep.
Absolutely. That's a great point, Tim. Yeah, so I think with that, when Fannie and Freddie both got rid of FICOs, it really, they didn't want to say we want to take risky loans at 95 at 500 now. What they're saying is that what they were turning enough stuff away if it was 620, 630, but there was enough LTVs when they ran their risk on those loans that were performing, paying and not paying. I mean, they were like, these people are still paying. If they got that much equity in the house, we're making these loans. So they were leaving money on the table by not doing those loans. Those were like A- paper loans years ago. Now this is probably A minus. They used to call them scratch and dent loans. They weren't quite A paper, but if you're at a 600, those normally didn't perform well. Now, normally you could get those through FHA, but try and get some of the properties through FHA if they need a lot of work. So now I'm switching stuff that is FHA to go conventional, just to get rid of the property requirement and restrictions too. So I just think it opened up some more doors there for us to be more flexible, less repairs, and taking a harder look at some of those deals that Fannie and Freddie would not have approved before. So that's all good stuff for this year. And then I'll move on quick, guys, to this. I don't know if you guys can see this flyer. I have this is a money mentorship flyer from the branch. So there's a program M&T does at the branch level that they kind of help mentor first-time home buyers. If they'll help them establish credit, they'll help them build a higher FICO or build a FICO. Okay, so if we get somebody that has no FICO, not that we can't do people without FICOs, but some you can't. So those ones are like, we're not quite ready to make an offer on anything yet. We're just starting the process. We really don't even have a credit built yet. What do we do? Or, my FICO, I don't have enough credit, but I only have one score. I need to get some more scores, whatever. And they're afraid to go that next level yet. We'll take them into the branch and help them open up a savings secured credit card for $300. Okay, start paying on that. We'll open up a savings secured personal loan, help them. They need to start paying on that. There's a couple little courses that the manager or the relationship banker will do with them privately, one-on-one, over the phone, in person, that shows them about budgeting, savings patterns, stuff like that. So it kind of coaches them, incubates them, helps them building the score. And over the next 3 to 6 months, they'll bring them back, the ones that are fully engaged, to the loan officer. If they can pop a score, pull a pre-approval, get an approved eligible, and bring them back to you guys, that's another deal, down the road this year that, instead of sending them out to the internet to go figure this out themselves, we do have a plan, and it's a true program. And this is just one flyer that I send out to different places that we can actually do these as many presentations. Like I have Remax up here. I can customize this. And then like down here for you guys in Mechanicsburg, Dawn Dixon is the local branch manager at M&T Bank right on the strip there. And that's her contact information. She normally can come out to these, and actually we can send those types of buyers to her personally. And she knows Rick, knows Robin C. Lover, knows what the plan is. We've already met with, the branch manager to say, we want to use your program more with our real estate agents to try and help get these people to the next level when they're ready to buy. So I just knew that over the years, there really was never anything, well put together that would take these people that are a little scared first, or don't have FICO scores, or don't have savings. What do you do with them? How do you get them in the next 3 to 6 months to, okay, I'm pre-approved, let's go look at some homes. So I just wanted to bring that up today. It's kind of a neat, I've worked at a lot of banks, but I never worked at one that had a true program to help people get them to the next level without scaring them away, make them feel comfortable, the ones that are really engaged and want to do something. So I thought that was a neat program. So I sent that out to Brooks, and he also has the he also has this too. Um, and this was kind of a highlight of the other products. Like we have first time home buyer programs, we have bi-weeklies, portfolio loans, our jumbo pricing's very low. We do have a pre-FHA. We have a lower rate on FHA. We have what's called an FHA CRA. So if they qualify for that, they'll even get a lower interest rate because we're in the fives, I think, on FHA. If you get an FHA CRA qualification in M&T Bank, you can be at like 5.25 on a 30-year fix.
Low fives.
That's
Yep.
that's really attractive pricing for a buyer. The grants that Rick mentioned, and then obviously M&T keeps their loans. We service them all, and we have digital business cards that you can share with borrowers. Sometimes today, trying to get a business card out to somebody can be, time consuming, but we have a little app on our phone. We can shoot you a business card and you can shoot that to a customer and they can pre-approve themselves or apply for pre-approval right on their phone, which is very user friendly for an iPhone. But anyhow, so we're just trying to help. What can you guys use to help convert more deals or get your agreements looked at? I mean, I'm seeing, like in York County 2 weeks ago, I've seen one of my pre-approved buyers over in York went in. There was 6 offers on a townhouse at 250. I mean, and he went in at full price and asked for a home inspection. He wasn't even close. So I'm seeing that, and then I also see houses on the market that have been on the market for 35, 45 days. So I don't know where the balance is at this point, but it seems like if you got a really nice house to sell, you're still seeing some strong interest on those listings. I mean, are you guys seeing the same thing?
Bong Brooks.
Yeah. I mean, it kind of depends, right, on location, where they're priced at, and the average days on market right now is dependent on municipality and counties, but in that 50 days range, which is definitely a lot higher than what we saw the past 5, 6 years, which was low teens, if not single digits. But yeah, I think stuff still in certain locations priced appropriately is still getting some multiple offers out there, but it's not as much as what we saw the past, 5, 6 years. Kong.
Yeah, I'd have to agree. It's very price sensitive.
Yeah, I see.
I've gotten a couple calls lately where agents are still in multiple offer situations. So it really depends upon what pocket of price range and area it's in.
Do you think people are still listing as high as they can with you guys? That you're taking listing appointments? I mean, are people still feeling as though they can get, a lot more than what the market is asking for out there in some cases?
I think it's definitely beneficial to future pace kind of your sellers and explain to them this isn't the same market that it was, maybe 3 years ago, where you can just, close your eyes and pick whatever number you think of first, and it's going to sell for that. You got to be more strategic in what you're doing here, and price your house accordingly.
Yeah, I had the pleasure of driving back from Atlantic City with Tim many moons ago, and Tim explained to me how he handles his listing appointments, and I was really impressed, Tim, with how you do it, because you definitely said you go in and you tell the people exactly what their house is worth, and you're like, I pulled the comps, I know what the house should be listed at, and you said that if they still want to start way up at the top, you don't always do that.
Right.
You'd rather just sell it for what it's worth.
Yeah. Yeah, it's over the last couple of years, we've had to be a little more flexible on that because what we think it's worth, a buyer will come in and pay cash and pay more for it because
Right.
there's no inventory. But years ago, we definitely were a lot stricter on the price, where
That's
we
true.
wouldn't even take the listing if it was so far out of line.
Yeah.
Today, I always tell everybody, stop being an expert. You know what I mean? Because the experts are the buyers that are willing to pay for something that there's no inventory.
Yeah. Yeah. Cash is king. That's for
Yep.
sure. Yeah, that I think that kind of creates a different market out there with sellers because they do think that there might be that cash offer over ask that is not going to ask for an appraisal contingency. So that's a done deal. You know, so there's nothing to challenge that sales price if there's no appraisal contingency. So interesting, very interesting stuff. We definitely want to be more visible for you guys out there. I apologize. Robin Sealover was sick today, under the weather. She texted me this morning. She woke up pretty bad. But I would love to still be available for you guys. And I know your time is tight, but the old days we used to come out a lot and just stop by the office and drop off stuff. But my ask is, what are you guys looking for from your lender? I mean, if you had to say, what we would like to see more of, what would that be, do you think, in your opinion?
For me, it's always
Like,
been the availability. I mean, the relationship that I've had with you and that I used to have with Guy Fry over the last 30 years was, if I needed you, all I had to do was call or text and you were there for me.
yeah,
Um, these relationships with our agents need to be established so that when we're in the middle of game time, that you guys are there for us when we need it. So
yeah,
to
that
me,
still
that's
holds
what's most
true.
important.
Yep. No, I agree, Tim. That still holds true to today. When you need help getting the agreement together, or if you're in a pickle or whatever, we have to be able to be there. And then you came into one of my sales meetings many moons ago on Carlisle Pike when Guy was with us, and that's the same answer you gave 20 years ago. Just if I call you, I need you to respond and be present for us. So that was your number one reason of what was most important about your relationship with your lender. I still remember that to this day. So still holds true. Trying to think, is there any other questions, guys, that you want to ask us?
The only other thing would be investment opportunities. Do you guys have any good programs for investors?
I mean, we still have all the traditional investment property multi-unit that from Fannie and Freddie. I don't have anything portfolio wise that would be they're those are still considered risky loans, so they're not looking to put that on a portfolio, unfortunately. But we still do the full Fannie Freddie menu and different LTVs and different pricing. You'll still see some points. I mean, you don't have 3 points on those, but you might find 1.5 points on some of those deals, Tim.
Okay.
I will say, last week, you guys may have noticed there was a dip in rates. I mean, so with the labor market numbers that came out, I know there's pressure on trying to keep rates low, but if we are so teetering on a milestone change, and you can price mortgages right now in the high fives if you're willing to pay a quarter point, half a point, and in some cases that's not a lot of money. But I just locked in a sizable end loan for new construction last week, and she got 5 7/8 and paid 3/4 of a point for that. I mean, that's fantastic. She was ecstatic because when she applied, when the house broke ground, was like 6 months ago, and her rate was 6.25 or 6.5. And then when she finally got out to the house is done this month, and I gave her pricing options. I mean, of course, I would have shared with them a half a point, a quarter point option because psychologically she was doing cartwheels when she heard 5 3/4, 5 7/8. Oh my gosh, yes, if I can get it under 6, that would be wonderful. So that's really enticing right now because if they really get into a 0 point high five, I mean, it's just going to throw a lot of people back in the market again too, on top of what we already have. So it's NBC will come out with that. It'll make nightly news because that's a milestone change in the market when you go from a 6 to a 5 or a 7 to a 6. So yeah, it's moving in the right direction. I think we could see a nice lift from that this year.
Good. Thank you.
Sure. Okay, that's all we got, Tim. So,
All
Rick,
right.
any last comments, Rick?
No, that's it. Yeah.
Sounds good.
Appreciate your
All righty,
time
guys.
and opportunity to talk with you guys. Thank you.
Yes, thank you so much, Brooks. Thank you, Tim. As always, have a great
Yep.
day. We'll see you guys soon.
All
Take
right.
care.
Sounds good. Thanks. Yep.
Thanks. Bye-bye.
Brooks, Kong, anything you want to add to today's call before we stop? Aaron?
No, I think it was good. Colin?
Yeah, it was good. Nothing more to really add.
Okay, guys, well, let's go to work. Talk to you soon.